a gallon. That happened, of course, earlier this year, the highest in the nation. Newsom has called for a special session of the state legislature for December to pass a new tax, which he dubs the price gouging penalty on oil company profits. Once again, 50 and clear. Stay with us just ahead. We'll have a check of the markets. You're listening to Bloomberg 960.
24 hours a day at Bloomberg.com and the Bloomberg Business app. This is KNEW Oakland, KOSF 103.7 FM, HD2 San Francisco. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
I'm looking at just brutal losses in the fixed income markets. What do you expect from mortgage rates going forward? Get ready and get comfortable with volatility. Crypto ETFs are the second biggest losers with 48% drawdowns.
Breaking market news and insight from Bloomberg experts.
The fact is that we now have positive real yields according to market yields.
You really see consumers trade up or trade down.
I think we're breaking away from this idea that rates need to be at zero.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this half hour, we're going to take a look at the housing market, the mortgage market. We had new home sales. They came in better than expected, but definitely below last month, so seeing a cooling there. So I guess that's what happens when mortgage rates go to 7%. So we'll break that down with Bloomberg Intelligence analyst Erica Edelberg. Plus, we're going to scan for some stocks. We do that with Dr. Quincy Crosby, Chief Global Strategist for LPL Financial. That's all coming up in this half hour. But first, let's kick it off with John Tucker. Get a Bloomberg Business Flash.
And I kiss my 3% mortgage every night before I go to bed. Anyway, the tech-heavy NASDAQ appearing losses that had topped 2% earlier in the session. Microsoft plunged the most since March 2020 after its earnings highlighted the impact of the surging U.S. dollar. It's most active right now. Microsoft shares down 5.9%. But, the investor focus shifting in great part to the rate story. After a less than expected rate hike from the Bank of Canada, there's hope the Fed's going to follow suit and ease off the brakes in the U.S. Russ Kostridge over at BlackRock says on the interest rate front, there may be some light at the end of the tunnel.
The economy's slowing, which is obviously what the Fed wanted. I think you're also getting to a point where you're starting to have a narrative congeal around the Fed getting close to 5% and then pausing.
Well, he spoke before the Bank of Canada action this morning. S&P 500 right now, 8 points higher. That's up 0.2%. The Dow Jones Industrial Average up 254 points. That is up 0.8%. A lot of the defensive shares also getting a boost, and it looks like energy is in the lead as oil prices get a bid right now. They are up 2.6%. That is NYMEX crude. And the tech-heavy NASDAQ 100 right now shaving a lot of the earlier losses down 81 points right now. That is down 0.7%. We check the markets for you every 15 minutes during the trade today right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash Call.
All right, John Tucker, thank you so much. We appreciate it. All right, Katie, are you a homeowner?
I'm not. I have visions of being one. One day.
Okay. It's kind of tough out there, I think.
Yeah.
U.S. 30-year fixed mortgage rate tops 7%. That's the highest since 2001. That's reported by Bloomberg. That's a far cry from, I think, Matt got his mortgage, less than a year ago, 3.25 maybe.
That sounds
Isn't that amazing?
like a long time ago.
That jump in such a short time frame. So that's a big deal. And then we have new home sales today. I guess you see it in those numbers. 603,000 new home sales. That's better than the consensus of 580,000, but that's below last month, 685,000. So it's starting to really slow the growth in new home sales here, the high
Maybe
mortgage
that's
rates.
good for people like me. I mean, I'm not imminently looking to purchase a home, but I know some people that are, and they're just waiting for the market to turn enough.
Yeah, I know.
Where it makes sense again.
All right, let's talk to somebody who does this for a living. Erica Edelberg, she's a mortgage-backed securities strategist for Bloomberg Intelligence. Erica, what do you make of that new home sales data we got today? How did you read it?
Well, it looks like we're continuing it. I think a lot of people didn't expect last month's little surge to last because mortgage rates are going up. And if anything, the new home sales number is probably still a lagging indicator because rates have risen a lot this month as well. Overall, we're down around 18% year over year, and I think that's not to be unexpected. At the same time, we are seeing new homes under construction going up. So there's a continued kind of stabilization in prices and new home sales, but that may not last as well.
And let's talk about what U.S. mortgage rates are doing. I have to imagine that's trickling through into some of that new home sales data. U.S. mortgage rates topping 7%. That's the contract rate on a 30-year fixed mortgage. What's the ceiling here? It seems like it's lifted every single week.
You know, it's really quite related, obviously, to where treasuries are going, and I know that our economics and our treasury team both expect that treasuries should be leveling out soon, because even though we do expect short rates to continue to have to rise to fight inflation, I think the economy will start to slow in response, and therefore that will start putting a limit on how high treasury yields will get. And mortgage spreads are also very wide treasuries right now. We actually think they're probably wider than fundamentals suggest. I think there's just a lot of digestion going on as the Fed pulls out of the market, but even take into account kind of, you know, where we think the Fed holdings as a percentage of the market will be, we think spreads are probably a little wide. So we're seeing some strong buying just the past couple of days by mortgage investors who say spreads are wide enough. So, you know, presuming the money and the dry powder is there to kind of stabilize the mortgage market, it looks promising, at least in the most recent trading sessions.
That's kind of where I wanted to go, Erica, in kind of the market you cover, the MBS market. I'm looking at the Bloomberg U.S. MBS Index total return, and year-to-date minus 15.3%. And don't worry, you have lots of company and that type of performance across the fixed income segment. Do your clients you talk to, are any of them saying, boy, this is, A, it's historic in terms of underperformance, and B, it can't get that much worse, maybe now's the time?
Yeah, well, I definitely have a lot of clients talking to me and saying, you know, at what point are spreads wide enough? And of course, I can't fully answer that question because there's always unknowns, and we're not really allowed to do that. But I will say that when we run regressions and look at where spreads are relative to fundamental economic variables, as well as the housing market variables, and even, you know, our expectations for Fed holdings as a percentage of the index, spreads look wide. Now, one of the things keeping spreads wide is the fact that volatility, both in terms of returns, so, you know, from a fear versus greed standpoint, but also just in terms of how it affects mortgage valuations, because there's negative convexity in the mortgage sector inherently. So high levels of spread volatility actually do reduce the value of the mortgage overall, fundamentally. But that being said, even taking those into account, spreads look wider than they should, wider than our models think they should. So then it just becomes a matter of who can fill the Fed's void as they step out of the market.
Right. Well, Erica, that's what I wanted to ask you. How much of that maybe unjustified spread wideness can we just blame on the Fed pulling back from the market?
I think we can blame the bulk of it on that, but we also can blame the high volatility overall in the market and uncertainty about the direction of rates and the magnitude of Fed tightening policies, which is related to all the unknowns about inflation. So, you know, it's not as you guys said, it's not only mortgages that are underperforming. 4% underperform. Obviously, equities have underperformed. So it's a global asset class risk-off phenomena. But at the same time, I will add the interesting fact that as of this month, mortgages and an excess return basis, which is considering hedged returns, are actually the worst performing sector in the Bloomberg Aggregate Bond Index. So we've taken that dubious crown. It had been corporates until September. So, you know, that also points to the fact that mortgage cheapening may be overdone even relative to the other risk products.
30 seconds, Erica. What's the credit risk for mortgages right now?
I'm getting that question a lot. My opinion is it's very low. Lending standards is very high, and the amount of equity most homeowners have in their homes is very strong. So not a concern for me at this point, but obviously we'll be looking for any signs pointing in the other direction.
All right, great stuff. I'm so glad we have somebody like Erica Edelberg with us, because the only thing I know about the mortgage-backed securities market is that what I learned in the great financial crisis. I'm probably like everybody else there, which is, boy, we had to get smart quickly on that, and it's a very complex business. But fortunately, we have pros like Erica Edelberg, mortgage-backed securities.